All right, what's going on, everybody? How are you all doing today? Today we're going to do a fairly quick little breakdown on how Heikin Ashi candles work, why you might want to use them, what's different between Heikin Ashi and regular candles. So let's just jump into it. I had this requested in the comments from a viewer, which I very much appreciate any requests. So if you do want to see something, by all means let me know and we'll try to go over it and try to do it in a way that's hopefully not super boring and as easy to understand as I can make it, I suppose. Looking over here at the chart on the Bitcoin 15 minute, I've got most things turned off. I still got a little market cipher down here just to watch, but we've got Heikin Ashi candles zoomed in nice and big. And the one thing that should jump out ahead of anything else when looking at Heikin Ashi candles that may be different from regular candles is you notice you have a nice long string of green candles and then string of red, back to green, nice long red right there, nice long red, nice long green. Even when you get these funky looking little patterns going on right there, which we'll get into in a second, but obviously it is just easier to look at. You know, you tend to see these little up and down trends a bit more steady rather than the back and forth, you know, red, green, red, green, red, green that you get with the regular candles. And so why would you want to use that? Well, I mean, for starters, it's kind of simplifies what you're looking at. So it was created and it exists to make it easier to follow the trend or to see the trend without maybe as much distraction or some of the volatility of the candles flipping back and forth between, you know, colors. Now, just to start off with a little bit of an overview. So Heikin Ashi comes from, you know, old Japanese traders who came up with a lot of the, if not everything that we use over here in TradingView, but Heikin means average and Ashi means pace. So it's displaying the average pace of prices. And if you look at regular candles, the biggest difference is each one of these candles is independent from, you know, the candle prior or next to it. Each one is just all on its little lonesome. But with Heikin Ashi candles, each candle is related to the previous candle before it. So, you know, this guy here is the brother of this guy here, is the sister of this guy here. And so each candle is kind of dependent upon the previous one for the way it's shaped, the way it looks. Now, the biggest difference is, you know, with regular candles, you have, you know, your open. Let's see, we'll just do a little drawing here. Your open, your close, your high, and your low. So, you know, candle body, open, close, your highest point, should be pretty self-explanatory, and your lowest point. Now, although it looks fairly similar on the Heikin Ashi candles, it is a wee bit different. You are going to have, you know, and you can see it up here, your high, low, open, close, but the open is going to be the average of the open price and close price of the previous candle. Let me go through that one more time. The open of this candle is going to be the average of the open and close of the previous candle. And I'll come back to some of this here in a minute, but the close price, which, you know, on the current candle would be the current price, but sort of. The close price is going to be the average of the open, the close, and the high and the low of the previous candle. So basically you are adding all four together and dividing by 4. And that's getting you the top of the candle body right there. And the high is just going to be the highest value of either the high, open, or close from the previous, and the low is going to be the lowest value of the low, open, or close, which is basically just saying the highest or the lowest price because whether it's open or close, high, high or low, it's going to be the high or the low. So no need to overcomplicate that part a little bit. But in the classic candles, in order for a green candle to form, you need to have, let's just go over to them. Your current or close price be higher than the open price, or in this case, here's your open and your close price is lower than the open price, you get a red candle and it goes down. And with a Heikin Ashi candle, in order to get a green candle, the close is above the midpoint of the previous candle. I'll say that again. So in order to get a green candle, the close has to be above the midpoint of the previous candle. And for a red candle to form, the close has to be below the midpoint of the previous candle. And what this ends up creating is kind of an average, almost like a moving average, but with candles. And the reason they do, the midpoint is because when you're working with averages, your midpoint is kind of like the average. So if your close ends up going below that previous average, now you're trending down. And so the one thing about Heikin Ashi candles that you need to remember, it is a lagging indicator. So you may come over here to the regular candles and say, okay, well, we kind of hit a bottom here, come over to the Heikin Ashi, and it didn't turn green until all the way over here. Despite the fact that we kind of even wicked up a little bit here, had some little bit reversed price action, even though it did pull back down on that candle. But it is always going to be just a little bit behind, whereas with the regular candles you are seeing just live time, absolute price, nothing else about it. With the Heikin Ashis, you come look over here and obviously you can see some differences, like in this section right here, where it seems like you just have this smoother trend going up, despite the fact that we have one big candle right there. Turned red on that candle. And you can see, we already got flaky and turned red on the prior candle. So there is a little delay. And that is why they generally call it a lagging indicator. What else? But yeah, you want to remember that each candle is related to or calculated from the previous candle. And let's see, mention that. And so, in order to have a bullish trend, or not so much in order to have, but when you're looking for a bullish trend, obviously you want to see, nice big green bodies. The bigger the body, the bigger the move. And you want to see upper wicks. Now, when you start getting bottom wicks on green candles on a bull trend, that's generally a sign that it's starting to weaken. So like right here, nice big body candles, big upper wicks, started getting lower ones, had that reversal. And it's going to be the opposite for the red candles, where you're getting, lower wicks. And when you start getting, that sucked. When you start getting upper wicks on the red candle, it's when it's starting to weaken. And when you see a doji star like that, it is generally a sign of a reversal, saying that the trend is stalling and starting to go the other way. Again, keep in mind that it is lagging a little bit. So in reality, it's already reversing a little, and it's just showing up in the Heikin Ashi. Now, one thing to keep in mind with Heikin Ashi candles, here's a good example right here, and this can oftentimes take a little bit of getting used to after using them for a little while. You know, you have this run up, and you can see in the candles where it kind of comes back down a little bit. And when you're watching this in live time, which I imagine we're going to get it here any minute, but when you're watching this in live time and you start seeing this smaller candle right here, you know, you want to keep in mind that in reality the price has pulled back a little bit. Now, it can continue, but if you see exactly what we're seeing right here, you should know that, you know, this is basically already reversing. So just something to keep in mind. Or you get in a case like this, where it's jumping up and goes right down into a red candle. That's generally a little bit of a steeper pullback. Let's see if we can see if we can find it over here. Yeah. And you can see on that, you know, previous example where we came up. So personally, I like it. If you watch this channel, you know that I 99% of the time have Heikin Ashis on. For one, it's just nicer to look at. It's a lot cleaner, smoother. And once you get used to that lagging effect, you learn to work with it a little bit. You learn to live with it. Like up here, we're on the 15-minute time frame. And you can see right now, you know, we had this candle here with the bigger wick, and this one we're a little bit shorter, and it's not necessarily a bad thing immediately. So you want to keep in mind, see, like right here, the current high is just about to the height of the previous one, and it's going to start out like that. Like, you're not automatically going to start the next candle like this. You know, it's going to start down here and work its way up. And it's not until you get another candle that, you know, you're really struggling to get around, you know, out from this area where you see a definitive pullback and it stays there. And then you start to see it lowering a little bit more, starting to get bottom wick. That's when you know you basically already reversed. And another trick for that is, you know, jump down a time frame, see what it's doing down here. Say, okay. Come down on the 3 minutes. So like right now, coming up, yeah, not too bad. I mean, kind of staying sideways a little bit. Okay, now it's looking like we potentially might run out of steam a little bit. Whereas, you know, you come up here on the 20-minute, all you see is the big candle. So if you're wondering, you know, what's going on, you can always jump down to lower time frames and see a little bit more detail. All right, let's see. Oh, another thing I wanted to point out as well. So up here you have, let me try to zoom it in a little. You have your open, high, low, close over here on TradingView. And just to give you a comparison between Heikin Ashi and classic candles. So depending on where you have your cursor, that vertical line is going to give you the data for, you know, that particular candle. So the previous candle right now, we'll start with the high and low. So the high, 29,939. Jump over to classic candles. High, 29,939. Low, 824. Low. What we got? Yeah, 29,795. So you can see, don't have that wick down there. Now if we come to the previous one, you can see this one does have a bottom and a top wick. Come to this one, what's the low? 760. 754. Yeah, that's interesting. Why there's a slight little... Oh, sorry, I was on the wrong one. 760. And on the top for the high, 862. 862. So keep in mind the bottom of the body is the close, or in this case, sorry, the open, and the open and closes are going to be those averages. So if the low ends up the same as, or sounds weird, but like above that average, not going to get a wick. But if you come over here, like on the, I don't want to do current, let's do this one. So open 795, open 846. So there are little differences between the two, particularly in the bodies. But if you do have wicks on both sides, you know, high and low is going to be the high and low. So just keep that in mind. Will it actually affect what you're doing or your trading? Probably not. But if you are going to have it on Heikin Ashi candles, you can see over here on the price scale, we actually have two numbers. So you have 29,940, and then you have how much time left in the candle. But you also have 29,932. Come over to the regular candles, 29,932. So it's something you can turn on and off, because this is technically the close price for the Heikin Ashi, but you can also have it display the actual current price. And you know, if you're trading, particularly if you're in the moment and you're trying to catch that, you know, entry or exit, you may want to see what the exact actual price is. So if you don't necessarily feel like, you know, flipping over to classic candles, you could at least have the price right there next to it. And this will jump above or below, you know, the Heikin Ashi close price also. I don't know if you can actually have it put a dotted line across. I don't think you can. At least I don't think I've ever seen it. But that is Heikin Ashi in a nutshell right there. You know, as far as any little tips or tricks, you know, oh, another thing too, when you see a situation like this where it's just constant, you know, wicks on top and bottom, that's a whole lot of just sketchy up and down volatility. You know, if you come over to the regular candles, you can see it's just a hot mess. And so when you see that kind of action going on, just be cautious. It's kind of interesting. Sometimes you'll actually see, where do we go here? Situations like this where you come down and dip and all the wicks are like practically in a straight line. Not too often. This one's probably a little bit more common where you have the big wick and then you're kind of hitting a bottom right there before jumping up. Again, another example of kind of sketchy at first, then clearly dumping, taking a pause, you know, wicks on both sides, another upper wick before getting right back to it. So even though it's all red, in reality, you know, you're kind of seeing this action. And so after you've been using Heikin Ashi for a while, that's kind of what you see in your head, regardless of what it looks like on here, whether it's all one color. Yeah, you see this, you see, okay, a little bit of sketchiness there, up, down, up, down, up, down. You get these guys with big wicks going both ways. Well, let's leave a little marker here. Shit. Yeah. Big old brick walls of candles. Yeah, when you're seeing big wicks on both sides, it's generally some pretty crazy volatility where you're shooting up, shooting back down, shooting up, shooting back down. I wish when you changed it, it would go back to where you left off. Oh well. So that's what that's all about. If you have any questions, let me know. If you think I'm an idiot and I said something wrong, also please let me know. As far as what's going on with the market right now, just had a little 1% pump. Kind of wasted on me at the time I'm trying to make the damn video, but oh well. We got money float kind of coming up a little bit, kind of going sideways a little bit. Let me shrink this back down. Let's zoom out a little bit, see what's going on here. On the 1 hour, kind of shrinking in the green. Still just having this little upward channel going right there. Technically, that would be like a bearish pattern if it doesn't change. You know, oftentimes when you start to see these kind of situations, get this big rejection momentum wave. This one has started poking out above, so doesn't necessarily have to be the case. Let's see if I could find an example. See, here's one where it didn't happen, but that was a little different. I just saw one not long ago. Like this. Started trending up, got rejected. But in reality, it was just a little preamble to that big one. Had the super weak RSI right as it was coming up above the zero line. Oh. What we got? 14, 15. Not looking too terrible. Again, still just the money flow looks horrible. RSI is generally still kind of trending downward, even though we're sideways for a little while now. You know, VWAP just doesn't have any get up and go in it. It's just kind of leaning. You know, 6 hour potentially looking good. You know, VWAP cross small green dot. Be nice to see this roll over. Keep a bit of an upward trend going on there. RSI is still close together. If nothing else, it could be a good sign for Sunday evening into Monday. You know, slow but steady money flow has been increasing. Nah. And it's just been kind of rough lately, so we'll see what comes of it. Gotta clean these up. So that's all. I'll leave it at that. I hope you all are having a fantastic weekend. And, you know, spend some time with the ones you love and get outdoors and have some fun. It kind of had a little ring to it. I like it. All right. Later, everybody.